All right. So, Sean, it's a pleasure to connect with you today. DealMaker's technology was made for founders exactly like you to streamline the capital raising process. And we watched you raise. You really put on a masterclass in raising capital. So it was so exciting for our team to have the opportunity to do a case study on NeuroStreet's capital raise. For anyone new to NeuroStreet and your raise, can you share some background on yourself and what you guys are doing? As a capital markets geek, I absolutely love it. I think it's so important for the ecosystem in bringing education, but I will stop there and let you describe it.
Sure. Thanks, Rebecca. Glad to be here. I have nothing but great things to say about DealMaker and your team. A little bit of a backstory on myself. I'm a serial entrepreneur. I basically came out of finance with a broker's license. Most of my colleagues went into the banking industry. I went into capital markets, building fintech applications into financial platforms. We started with building education brands, launching schools in the trading space, and then we started with development companies, building into all the back ends of all the major trading platforms. And essentially, what we ended up doing was getting to the point where we were so big, we wanted to raise capital so we could do a strategic acquisition and step into the major leagues by acquiring our own financial platform. So that's kind of what led me to DealMaker. I know I've left out probably lots in between, but that's a quick elevator pitch. Yeah.
I love that. And let me dig into one point just because I'm very curious. Like, I've never seen someone. You've got a platform that's by traders for traders, and you've paired that with education for people to learn how to trade. How did you think to do that?
Well, essentially, it started with the schools. We, as a trader myself, and as somebody that was passionate about financial trading and the markets, there's a huge demand for education because the failure rate's so high in the trading industry. Like, almost everyone that's getting into the markets is going to blow out an account one way or another before they kind of figure their grounds and get their bearings. Investing is much more simpler than trading, and trading is, very high risk. So, there was always a huge demand for education, but with education, most people now are trading with software. They're either using special systems, strategies, indicators, algorithms, some form of technical solution that is basically built into financial platforms that help them make their trading decisions, right? So that traders don't have to rely on their own cognizance, right? So we've seen a huge market for that. And building trading software, systems, strategies, indicators, algorithms. And that's kind of how we kind of springboarded the education and the platform the platform software applications. And once we got to the point where we seen, okay, well, we've got hundreds of applications into all these other trading platforms, and we've got the schools in the education framework. It was only a natural path for us to kind of venture in to become our own financial platform where we could basically have a self-contained ecosystem of platforms, schools, software, education, everything all included. And that's kind of what NeuroStreet is. NeuroStreet is not a company, it's a portfolio of companies. It's more of a household brand of trading and financial software applications. Yeah.
I love that. That's so smart. So, like, if I want to get into crypto trading, I can come to you. I can actually learn how to do that first, learn how to use the algorithms on the NeuroStreet platform, and then start doing it.
Well, NeuroStreet, let me just kind of explain this. So we have a day trading school. And basically the mandate for that school is we have stocks and options programs running with the live instructors daily. We have futures and Forex programs running daily. So we have multiple trading classrooms running daily with instructors and online schools. That's the day trading side. When crypto started booming, we seen a huge demand for the crypto angle. So we launched a crypto university in parallel. So we actually have a crypto school. We have a day trading school. Essentially, NeuroStreet isn't a platform. NeuroStreet is a portfolio of companies that basically make up all of the schools and the fintech arms. We have a development company that ultimately builds software and systems into all of the global leaders in terms of trading platforms. We've got development teams. We've got about 100 different applications in 5 leading trading platforms now.
Oh, wow.
And we just got to the point where we were like one of the top 3 largest app builders in the world. I use the analogy of, if you think Apple and Google or Apple and Samsung, we were like one of the largest app developers in the phone. And we're like, well, how do we become Apple? How do we become Samsung? And that's kind of what ended up happening when we found DealMaker, was we were going to build our own trading platform and go up against industry giants like Thinkorswim or TradingView or TD Ameritrade or, NinjaTrader or all the major trading platforms out there. And we knew that we were going to have to do a big acquisition or at least raise a lot of capital to be able to spring into that direction and then take our ecosystem. And that's kind of why we met DealMaker, is because we needed a platform to be able to do that.
Awesome. Okay. So you kind of set the stage there. Let's take it even a step back about how you were able to make your raise so successful. So it's early 2023. We're in the middle of the crypto winter. Silicon Valley Bank has just collapsed. I know what I went through with DealMaker, even though we were in no way related to that. We didn't even partner with them. Public stock markets were going sideways, yes, ahead of a run. So you started raising really in the teeth of a very challenging market, which makes your success all the more noteworthy. Tell us about where you were at business-wise, and you've alluded to it, but share a little bit more about why you decided to raise. That was the time, challenging market. Sure. You've got this acquisition that you want to do.
Sure. So I'm a big believer in that if an opportunity comes around and it's sexy, you can't pass it up. You just, you jump in and you figure it out as you go. I know that's a pretty bold risk on environment. Sorry, but I knew what kind of lit the fire for us, and it really had nothing to do with timing. We knew how much it would cost us to build our own trading platform. We priced it out. We were looking at anywhere between 20 to 40 million for us to become a major contender in the top space. And that was definitely one avenue we could look to venture down. What ended up happening is we knew that it would take about 5 years and about 30 programmers to do that. And we just weren't prepared to take that long to do what we wanted to do. We had our mindset on an expansion and a vision for where we were going. And so we put feelers out with a lot of our connections, brokerages, hedge fund trading, copy trading platforms, integrations with other, in our Rolodex. We were fortunate being in the space. We've got a lot of ties in a lot of different areas. So we put some feelers out that we were looking to do an acquisition. And if the technology was, strategic enough and there was a competitive advantage that, send it our way. And lo and behold, we discovered TickBlaze. TickBlaze was founded by Daniel Toshner. He was a senior software engineer for Blackstone, which is a very large hedge fund out of the UK. And he's also a senior software engineer for Ridgeline Apps, which was ultimately one of the largest asset management platforms in the US. And he was the founder of TickBlaze. And when I learned about TickBlaze, it was a platform that was predominantly being only used by institutions and quants and family offices and hedge funds, and had never been brought to the mainstream. And when we realized the competitive advantage was that it was like all of the other retail trading platforms that are in the market now, but on steroids times 100, because it was built for institutions. And if we were to bring this technology to the mainstream retail market, we could service both institutions and retail and be in the top 5 within a very short period of time. And so we weren't prepared to let that go. We said, I don't care if it's crypto, whatever. I don't care if the whole market came to an end. We were going to raise money come hell or high water. And we put our boots to the ground, and we were actually, it's interesting you mentioned crypto, we were actually looking at doing a security token offering. We were going to look at doing it through tokenization. I met with over 20 different firms in the crypto space, lawyers in every country around the world. And what we realized is that even though crypto is a booming market, it was still very new. Most tokenization processes were asset-backed ventures like real estate funds and anything. Most of the tokenization that was taking place in the STO market was in the real estate sector, and we were in the fintech sector. So all of the investors and the offices and the venture guys that we were talking to were more kind of keen on traditional raises, traditional equity rounds, more of a, the standard route now. I mean, maybe that'll change in the future. But so we, after a very long due diligence process, we realized that using a traditional platform like DealMaker was the best route for us. Yeah. To kind of bring that question full circle, we just knew we had to do it no matter what. And we knew it was challenging. We knew that every place we talked to was, they were closing their doors. They were not lending. Checks were not being cut at that time. And it was interesting, even our internal teams, even Daniel, the seller of the technology, was like, "Are you sure you're going to be able to complete this deal?" I said, "Just wait. We're just getting started." Right. So, long and behold, that's kind of what ended up happening. And we launched the raise early spring, and we closed it in Q3 of the year. We were able to raise more the amount of capital in 6 months that most people take years to raise in the worst conditions. And that speaks to our investor sentiment, and it speaks to our vision and our business model, and our what we're about to do. Is that it was really well received by the investors that came in. Yeah,
there's the grit that makes you a multi-time founder. I love it. So it's abysmal market conditions. You've got the acquisition. You need to get it done. You look at a couple of options there. Did you look at like VC or any other paths and weigh and balance on those?
So we had we brought in tech stacks to do outsourcing. I mean, there's a lot of software providers that have access to Rolodexes and lists of VCs and family offices. We put together campaigns. We reached out to hundreds of VCs and family offices. We set meetings up. We had meetings, and we met with some family offices. We met with some companies. We actually were privileged to meet with some of the companies that actually backed some of the larger acquisitions in the fintech space. But we weren't raising the amount of capital that they cut checks for. Like, we were doing a Series A. We weren't looking to do a very, very large Series B or a major expansion raise at this time. We were looking to complete our first round, so we set the relationships with some of those bigger firms for our next raise in the Series B, and when we do a much bigger expansion over the next couple of years. But what we found is that we had to get creative because, as you know, it was ultimately very tough conditions. The VC market was not very active. Family offices were very skittish. Angels were extremely cautious because most of them had all their money tied up in the markets, and they were losing money in the bear market. So we had to make a decision as to how are we going to do this. We're not running a solicited raise, right? It was a Reg D offering. We were only going after accredited investors. So we had to go internally, and we have a lot of clients that work with us. We've got people in our internal Rolodex that we have relationships with, that we have partnerships with, and we have a lot of collaborations with in their businesses, our businesses, and customers of ours that are clients of ours that are trading in our infrastructure for years. And so what we did was we just went internal. We spoke with the people that we have very strong relationships with. Not all companies are in that place. So, not all companies are able to go into their internal network and open up those discussions. That's why we maintained a 506 Reg D offering. Like, we weren't going to do a solicited raise, because that would have been the next route we would have took. Is that if we weren't able to close the deal doing a non-solicited round, we would have then basically said, okay, let's move to a 506C and go external. But we didn't have to. We had enough sentiment internally to do that, and we're very fortunate. It's interesting, if I can add to this, one of the things that I've always been asked is, like, should I do a 506B or a 506C? And a lot of people get scared to do a 506C because they think all the compliance and the admin is going to be much bigger. It's really not, right? Yeah. If you really want to raise money, and you want to close deals, market your raise. Yeah. Like market it as freaking much as possible, because if all you got to do is ask for tax returns and validate that with a broker dealer, like, what's the problem?
Not that big a deal.
No, I mean, it'll save you a world of hurt. So if anyone's watching this, don't be scared to venture out and market your round. We were going to do that, and we will do that on our next raise. We will do a 506C for the purpose of we don't see that as an admin headache. We see that as just necessary cost of business.
Yeah, so I think that's a good takeaway, right? 506B, 506C, not that different. Some tight network in 506B, you can market it a little broader in C, but like the compliance isn't that big a deal. That's super important. So I love, we were so impressed by the approach you took and how much you were able to raise in such a short amount of time in a down market. It sounds like the key to that was really a process-driven approach. You're making lists, you're hitting people in a very process-driven way. Is that fair to say?
Yeah, so I wouldn't say as far as hitting lists, like we have clients that, we've had using our products and services for years.
Okay.
Every investor that came in on our raise is at very close arm's length to us. They've been in our Rolodex for years. So we just started picking up the phone and reaching out to the people that we knew that we had relationships with, that, we've done business with. You got to be very careful if you're going to do a 506B that you don't cross the lines of solicitation, especially in a regulated raise, right?
Yeah.
However, you need to know what you can do, and we have great counsel. We have U.S. counsel and Canadian counsel. One thing that worked for us that was very strategic that I think could be a very good strategy for anyone watching this is that, we brought in Canadian investors and U.S. investors. And, one of the things that I said was, well, how can I make it, sexy enough for them to want to get in on the deal and not have to pull out money out of their retirement accounts? And so in the US, a lot of Americans have their money sitting in their IRA and it's not doing anything.
Yeah.
And in Canada, it's in an RSP or a TFSA and it's not doing anything. And so when we talk to traditional banks, the big six in Canada, they don't work with private rounds. They don't do private placements.
Yeah.
But what we did was we collaborated with self-directed firms out of Canada and then self-directed firms out of the US. We had to do a due diligence process with them. They had to basically approve our sub docs. They had to approve our raise and the term sheet and everything that was taking place. But once they approved it, we were able to let our investors know that you could come in under your regulated retirement accounts.
Oh,
and
wow.
we have a broker that will basically facilitate that with you. And they were very happy with that because that allowed them to be able to move investment in a tax deferred environment without triggering any complicated process. And it really only took about 3 weeks. And, if anybody wants the connections that I've made in those relationships, I'd be more than happy to pass them on. I mean, the companies we work with want the business, and it just allowed us to be able to use that as a sweetener, so to speak, for any of the investors that were wanting to come in. And, not everybody wants to trigger taxes in their retirement accounts. And we brought in about 6 or 7 investors on the raise that actually took advantage of that. I mean, it wasn't just one guy. It was actually well received on the US side and Canadian side.
Yeah. For sure. That's so innovative of you. So few people do that, but it's like a pool of capital that's sitting there that if you can get those approvals, people can access. So it opens up a whole new pool for you.
And it takes a little pressure off us because another intermediary has to actually validate what you're doing is actually credible. An RSP company or a TFSA company, they're not going to sit there and just let anybody put private placements into a company unless they've actually gone through compliance. And we were fortunate enough to do that. And it was seamless. It was a really seamless process. So yeah, just little golden nuggets. If you're looking at ways to kind of tip the needle, there's definitely creative ways to, appeal to your investor network. Yeah.
Okay, awesome. So you go through 2003, you get the offering qualified, you bring it in. It's now Q3, you're closing it up. Tell us about investor relations, because that's something we've seen you guys do an incredible job of, both pre-raise, post-raise. How do you think about communicating with this round now that you've brought them in?
So I think as an investor myself, in traditional markets as well as blockchain markets, there's a lot of scams out there. There's a lot of companies raising money. Trust me, believe in my business. I've got the next hot thing on the market. Put some money into me and just trust me, I'm going to scale to the moon, right? We're going to be the next Apple or Spotify or whatever, right? Shopify, you name it. And founders and boards will ultimately get into the trap of over-promising and under-delivering in the communication process because they're hungry, right? Founders are trying to raise money. They have an objective. They're trying to close the deal. They're trying to raise capital, and they need to be able to accomplish that goal. And I've seen it in some of the relationships that I've been privy to is that, once the investors bring in the money, or once the founders bring in the money, their focus shifts to, deployment, completing the task and all this. But they're also forgetting that the investors on the other end are people like you and I, and that's their money, right? Like they've worked for that money. They've saved that money, or they've done things in their life that's memorable to accommodate receiving that money. And you never want to lose sight of that emotional connection to people's money. And just because they may not be responding to you or emailing you with questions right away doesn't mean they're not sitting down and talking to their wife or their husband about the investment. Doesn't mean they're not sitting around talking with their friends saying, I'm an investor, I'm waiting for them to give me updates. And so what I always try to do as a founder is always put myself in the shoes of the investor and out of my own shoes, because I always want to think, okay, what would I want to hear going into anything? What do I want? Updates, milestones, forecasts, whatever it's going to be, because you can never give them enough. If an investor sees the progress updates, if the investor sees the milestone accomplishes, even the negatives, when we do a monthly press release to investors every month. We sit down at the end of every month. We send a big email to all of the investors, and we let them know each of the company dynamics. What are the big 3 wins in each areas? And then what is the roadmap? What are we working on now? What are we working on next? What are we aiming for? What are the pain points? Right? What are we struggling with? What are we doing to overcome those struggles? Because investors know you're not a superhero, right? Like business is business, and you have to be transparent. They actually prefer that. They would expect you to be open and honest about any roadblocks, any setbacks, anything, because if you're not having those, something's weird, right? You're not sharing the whole story. And when you keep things from investors, that creates problems. Yeah. So we've been very open door with it. Very open, kind of open concept. We do a quarterly Zoom. We have in our roadmap monthly emails, quarterly Zoom calls with everybody. And it's been very well received. In fact, I've never had a negative email from an investor since we closed the raise. Never had anything but praise. Most of the people are just super impressed by the way we organize it. And we just keep it clean, keep it simple, keep it consistent, because it has to be regular. And that way they trust you. They believe in what you're doing, and that's important.
That's such great advice. And we are constantly encouraging all the companies that use our platform to do the same thing. We built out a portal for the communications because we want them to be communicating. We're trying to build that out for video, photo sharing, because for me, I'm a visual person. So if I could see a picture of a new office, to me as an investor, I'm like, okay, that's where my money went. I get you. But it's so funny. I do a quarterly update, and I've had some of my investors tell me, you're our best communicating portfolio company. And I'm like, really? Quarterly update? That's it? Yeah. That's all it takes?
Yeah, it's you'd be surprised out there that, once the check is wired, it's crickets. And what it's done for me is it's kept the door open for new investment, right? When you have a bunch of investors that have put money into your business and they see the type of operation that you run, they see the type of flow that you communicate with, they see the development, the expansion, the growth, or even if they can't see tangible results yet, because they know sometimes you're either seed or you're either Series A or your growth, whatever stage you're in, you have to be able to show that progress. But as long as you're able to demonstrate that and they believe in you, you've always got access to capital. And that's important because most people struggle trying to find investors. When you keep your current investors happy, you have an asset there that's untapped. You never know what they're thinking, what they want to do, where they want to go, if they have more capital, if they want to put more money in later, if they want to invest in another venture. And if you do things right from the start, you don't have to fix problems later.
I love that. Okay, so let me recap a couple of points I think that we hit on. 506A, 506B or C, not that big a difference. Think about marketing. Even if you have a closely held community, you can go out and market more broadly. You'd encourage folks to do that.
Yes. Yeah, and to answer that, it's really a discussion as to if you have access to people that you know and that you have relationships with, and you can speak intelligently that you're within the legal compliance respects of the SEC, you can't solicit a 506B. So if you have an internal Rolodex of people, then do a 506B. If you don't, then don't be scared to do a 506C. Most people say it's a lot of extra work. It's not. It's just admin that is part of raising money. And if you market your raise, you'll be more successful a lot faster.
I love it. And I think the key point there, you did hit up your community really successfully. And what we always encourage founders to think about is that you have a community, whether you're thinking about it or not. you have friends and family, you have users, you have followers. It sounds like you got money from a lot of users of your ecosystem.
I had investors come in that I went to college with. I mean, I had investors come in that are product owners of us. We have investors that come in and are partners with us that do marketing collaborations, that are business partners of ours. So our Rolodex was a collaboration of people that we work with on a regular basis and we have relationships with for years. You want to be careful if you're marketing to a user base of clients that you don't know or you don't have relationships with. That's a form of solicitation and you can't do that. So there's a fine line between checking with your lawyers first, what you can and cannot do. And that's something I think we should add in here, Rebecca, is that we haven't touched base on building a team.
Yeah.
And most people, they get scared of raising money because they think it's going to cost a lot of money. Right. What we did was we knew that we were going to target Canadian investors and US investors. So we needed counsel for both sides of the fence. We needed a tech stack. DealMaker was what we chose. Get DealMaker, everybody watching this, because it's the best out there. This little plug, because I've researched every platform in the business. It was easy, it's fast. Their team got me up and running in 7 days or less. You name it. And you just need to be able to have a person that knows your financial models. I think if you're a business that doesn't have your projections, your financials, your models, spreadsheets, cap table, that type of stuff built out, you're going to have a hard time communicating to investors from a place of power. Yeah.
Okay, I love that. So hit your community. Everyone's got a community. Build a team so that you can get this done, being focused around where you're going to do it. And then do your updates. Don't be afraid to communicate the good and the bad. Monthly updates, quarterly Zoom. Think about how you're going to communicate. I like to say you've sold a product. Now you got to fulfill. So think about it that way.
Yes.
Super helpful, Sean. Before we close, what's next for you and the team? Is there anything you can share about the roadmap?
Yeah. We've got some big partnerships that came in. TickBlaze is the platform. You can go to NeuroStreet.com and you can see the ecosystem of companies, but TickBlaze is the recent acquisition for the financial platform. We've got some pretty big things coming. We had meetings with Benzinga for their tech conferences. We just closed a big partnership with Dev Experts. They built Thinkorswim and they have the DX Trade platform. Like, we did a big data partnership with them because we're going to be the first trading platform in the business that has all inclusive data. So what we're looking at, innovating different space, pioneering new ground in different areas. We have a very strong competitive advantage in algorithmic trading, quantitative trading. So TickBlaze is a hybrid platform, so it services both retail and algorithmic sides of the business. And we've got big partnerships lined up. We've got a lot of brokers that are waiting for us to integrate with. A lot of exchanges on the crypto side we're going to integrate with. It's a very, very big expansion. One of the things that we're super excited about is the open source community. So we believe that we want to build TickBlaze around a social community, and we want to very, very much mirror what TradingView did very successfully on the website of the business. They built an open source community which put them as the leading trading platform in the world. Their platform was built in their own unique code language, which keeps them independent to themselves. Because TickBlaze is ultimately C# and Python, and we can handle multiple code languages, we're going to be opening up the world's largest C# and Python open source community for developers, programmers, quants, schools, universities, influencers, educators. And because we've already built millions of IP and all the other trading platforms, we're going to take our major infrastructure and open source it globally, put millions of dollars worth of IP to the world to have, and open source the springboard to the community. So you won't have to pay for market data. You won't have to pay for software, courses, and education, and you're going to be able to use TickBlaze for all of it.
Oh my God, that's huge.
It's massive, yeah.
That's going to bring together so many components of the ecosystem.
We had a meeting with the CEO of Money Show a couple of days ago, and we've had some pretty big talks of getting things going there. So there's a lot of big things coming, and we're excited.
That's awesome. Yeah. Well, Sean, thank you so much for sharing your inspiring journey. Thank you for being a customer and embracing DealMaker as a portion of it. We feel totally privileged to have worked with you guys. And we're so happy you're willing to share your intel with the rest of the world. We're committed to education as well and getting more founders funded.
Yeah, and if I can say in closing for anyone watching this, if anyone has any questions about anything we've talked about, you can always reach us on the NeuroStreet website. I'll get that email, and if you need any assistance in working with DealMaker, getting in touch with things, raising capital, I've got a good Rolodex of people. We're really happy with DealMaker. I think a lot of people kind of get nervous about using tech stacks and raising capital. They don't know what to expect. Literally in less than 7 days, we were up and running. Your onboarding team had us implemented. They communicated with legal. We updated our docs. I mean, it was so seamless, and our investors loved it. Like our investors, give them a link. I had an investor fund within 48 hours. It was like in, sign, fund, done. Like what? Right? Like it was that, and that's what you want to hear that, and we want to experience that. Like as the owner of DealMaker, you want to hear your clients are having that experience. And as a client of DealMaker, we need that experience, right? Like it's important, right? Because we're busy and we don't want to be struggling with technology. It's already hard enough raising money.
Exactly. That's the idea, right? Shorten that time to close so the money actually comes in, convert more of the capital you're pitching, and get the round closed faster. And so exciting to see you guys did that.
Yeah. Well, glad to work with you guys. If you guys need anything, let us know.
Thanks, will do. Thanks everyone for joining. You can reach out, visit the website, dealmaker.tech, or hit us up at info@dealmaker.tech. Thanks, Sean. Thanks again for your time.
Thanks, Rebecca. Thanks for having me.